So are all of this down payment assistance program for real? Let's find out. Hey, welcome back. Enrique here with First West Financial. Welcome to my home buyer channel where we get to talk about all things related to buying a home. We deal with, everything related to real estate and mortgages. And today I want to talk to you about first-time buyer programs with no down payment. Are they for real? I'm here in California, and I want to talk to you a little bit about some of those programs and tell you really what you need to know about whether these programs are going to be good for you or not, or whether you're going to qualify or not. So hopefully we'll get an opportunity to clear a lot of the misinformation out there. So one of the first things you need to understand is that in order for you to purchase a home, on paper, the reality says that you actually have to have a down payment of some kind. There is no real 100% program. In other words, other than a VA loan and other than some USDA programs, the majority of the programs, including FHA conventional loans, require some level of down payment. So what has happened is that there are organizations and entities who have created down payment assistance programs that piggyback to help buyers get into houses with no money down. It doesn't mean that there is no money down. It's just there's a program that actually fulfills that requirement. So again, unless you are a veteran where you can get 100% financing, or you're looking at a USDA loan, which is geographically restricted, chances are you're going to need a down payment. So the most common program is an FHA loan that requires 3.5% down. So the 3.5% down can come from a gift, or it can come from your savings, it can be from money that you've saved. It can also even come as a gift from your employer or relative. But a lot of these down payment assistance programs use FHA as the foundation in order to be able to get people into houses. Now, how does that work? Well, I am in California, so I'm going to use some of the California examples. There are a lot of entities. Some of them are government related, some of them are not. But they issue either a grant or a loan or a second loan or a silent loan in order to cover the 3.5% down payment. So we're going to use the California Housing Finance Authority as an example, CALHFA. Very popular here in California. What they do is they have a program where they give you a regular FHA loan for 96.5%. And then they issue a second loan, which is silent. That means you don't have to make payments for the down payment. So you're borrowing the down payment in order for you to fulfill the requirements. So for you, you feel like you're going into this transaction with no money down, right? Oh, I didn't have any money down. Yeah, there is money down. You're just not coming out of your pocket. You're borrowing it, and eventually, in some cases, you're going to have to repay it. So that's how most down payment assistance programs work. Now, are they real? Do they really work? Well, I'm here to tell you that they are real, and they do really work. There's some great advantages to it. Because the price of real estate continues to go up, purchasing a home with practically no money out of your pocket, it's a great thing. I have known people who have bought a house 2 years ago using no money down, and then 2 years later they have $190,000, $200,000 in equity. Think about that. They're basically taking all the equity without having to put the money down because the market is in their favor. So that's one of the advantages. The second advantage is that in many cases, the qualifications fit a lot of people. So if you are a first-time buyer, if you have decent scores, you don't have a lot of debt, you will probably qualify for some of these programs to a certain extent, right? In California, we have programs that have very high income limits, so we'll cover that in a minute. So that's another one of the advantages of the program. Now, the third advantage is that in most cases, not always, but in most cases, you don't have to make payments on the down payment assistance until you either sell the house or refinance it. So if you get zero down option, you get a program where you don't have to put money down. You live in the house 5 or 6 years, then you sell the house. That's when you pay that money back. But in the meantime, you get to keep all the equity. That's one of the advantages of some of these programs. Now, lately there's been some additional programs that have resurfaced. One of them is the Equity Builder Grant, where you don't actually have to pay the money back if you stay in the house for 5 years. There's a few requirements. We're not going to go through all the requirements here, but there's a few requirements that are needed for this particular program. One of them is you have to live in the house for 5 years. You have to occupy it for 5 years, and you cannot have non-occupant co-borrowers. You do have to be a first-time buyer, and there are income limits that keep you from having to buy much of a house. So those are some of the challenges of it. So in general, there are some qualifications. In most cases, I'm being very general because not every program is the same. You're going to have a first-time buyer class that you have to take online. It takes about an hour to take the class, maybe 2 hours. Number two, you are going to have to be a first-time buyer in most cases. Number three, you are going to have to live on the home as owner-occupied. You cannot use these programs to buy a rental or a vacation home. They are really designed for you to buy your primary home. And number four, you have to have at least some credit. Credit has to be pretty decent, 640 or better in most cases. And you're also going to have low debt ratio. So if you have lots of vehicles and cars and student loans, it might be harder for you to qualify, right? So those are the general qualifications of the program. I could probably spend 5 episodes going over the different programs and telling you all the different qualifications. I don't want to do that. What I want you to do is I want you to find a mortgage broker that can help you find the program that is right for you. People tell me all the time, is this a good program? Well, I don't know. It's a 9 size shoe, a good shoe. Well, if you're a size 10, it's not going to fit you. No, it's not a good shoe. But if you're a size 9 and it's a good shoe, then yeah, it's going to fit you. Then you're going to say, yeah, this is a good shoe. Same thing happens with loans. Loans are fine. Loans are great. The catch is it the right fit for you? Do you qualify for the program? Do you really need the program, right? I have done a few refinances over the last year for people who bought with no money down. And the amount of equity that they have built in these houses is staggering. I've seen people build $250,000 in equity and buying a house with 0 down. That's one of the advantages of homeownership, is that you get to build equity on it. So find a mortgage broker. If you're in California, give us a call. We'll connect you with someone local, or we'll be happy to help you. If you are anywhere else in the United States, go to www.findamortgagebroker.com and find a broker and tell them that you're looking for down payment assistance. Be educated, learn more about it. Don't go on the internet and start typing down payment assistance program. You're going to get super confused, and you may end up with people that are not necessarily qualified to help you, or programs that don't really even exist. They're just trying to scam people. So don't go on the internet and type down payment assistance. Go to a mortgage broker, find out some answers, and get started. I hope you have a great rest of the week, and I hope that we're able to help you with this and any of your education needs in terms of buying a home. Make sure you hit subscribe. Go check out our other videos. We have tons of them. Have a great day.